Welcome back. You're watching Stock Picks. Today we look into some of the major players in the education sector with a particular focus on Advtech, Curro and Stadio. And joining us with that analysis is McLachlan from Integral Asset Management. Thank you so much for your time, Keith. I loved what you said off air that we are getting schooled today because we are going into the education sector. Quite interesting report cards that we've also seen over the last while. But really, just an overview of why you decided to focus on this particular sector and actually why, I guess, the whole education sector looks attractive.
Sure. So, simplistically speaking, I mean, South Africa's sovereign fundamentals have improved, while the rest of the world has deteriorated. So, you know, when you're looking at markets and thematics, SA Inc. has become a very, very popular, if at this point only really local theme, but at some point, as South Africa improves, that will hopefully broaden out and you'll start to get more foreign participation in our market. So South Africa is looking promising. Then zooming in a little bit more topically within South Africa, the education sector is quite attractive for a number of reasons. First of all, its main competitor is the public sector.
Yeah.
Because you've got private sector education, some of which is listed on the JSE, the stocks we talk about now. And then you've got public sector education. And those are your two alternatives, effectively, assuming one doesn't want to go online or do international things. So, and it's really, really great to have a market that is both huge and a very, very weak, dominant competitor, which is the public sector. We know the public sector education is straining at the seams. It has been underinvested in and has been badly managed, and especially the tertiary institutions are quite full as well. So therefore, the private sector is positioned to catch the spillover, and an added attractiveness of it is that education is effectively an inelastic service. It's a defensive business model. People, typically speaking, not always the case, but typically speaking, parents will sacrifice such that their children can have education. And therefore, nothing is entirely recession resistant, but it's as close as one can come. And then especially in times, and you'll see when we start delving into the stocks, we've come out of a very tough period where particularly bad debts have sparked. Curro it took more bad debt losses. It had to, at the end of the day, you've got to pay for the private education services, so that if the student isn't paying at some point, they have to be kicked out of the school or the tertiary institution and the seat given to a student that will pay. But looking forward, assuming the fundamentals in South Africa translate into ground level improvements, one sees a slightly better consumer environment, better spending, and the first rand spent are often spent in education, healthcare, and these defensive sectors. So for this reason, education is a thematic, and South African education is a thematic, and the private sector is very attractive investment proposition.
Well, let's actually delve into Curro. You talk about bad debt spiraling. Would you say that maybe Curro is one of the more cyclical ones where it will go with the kind of economic fundamentals? Because I think even in their last results, they actually told us that they're struggling to get a boost in enrollment for particularly grade 1 learners. And those usually come from parents that are younger, that seem to be the ones that are more vulnerable to the economic headwinds right now.
Yes, so Curro's history determines what it's exposed to, and its history, ignoring the unbundling of Stadio, which we will circle back around to. It's one of the listed tertiary stocks on the JSE. But Curro built out a large schools portfolio, and then needed to fill it. So it's been through peak capex, and in fact, in FY23, its cash flows finally were larger than its capex bill. But it's less building and more filling capacity. Yeah. And on that journey, you have to look at where they focus. And by the way, it's worth distinguishing between schooling and tertiary. Yes. Schooling is effectively, well, it's schools. So it's anything below tertiary, and tertiary is heading up anything post matric. grade 12. So we're looking at university all the way up to PhDs and the like.
Yeah.
So, and Curro is purely schooling, first of all. Second of all, their target was to be a low fee school.
Okay.
So they targeted the lower LSMs, the more fee sensitive portions of the education sector, which arguably there are much more of them. If you have a look at the LSMs in South Africa, much like anywhere in the world, it's a
Yes.
pyramid shape,
Okay.
where the volumes are on the bottom LSMs, and that's really Curro targeted mid to bottom in terms of the private sector education. And because of that, they filled their schools quickly and they had a very competitive offering. But because of that, in the last couple of years, as consumer disposable incomes deteriorated, they found their bad debts rising until ultimately, and by the way, it's worth putting out, they're not spiking, they've actually gotten them under control. They spiked
Yes.
probably about 18, 24 months ago,
Yeah.
and they brought them back under control. But unfortunately, that has an impact on their learnership numbers, because some of this means if you're not paying for the services, at some point they have to remove you from the school, and that has been a particular sore point for Curro, and in a way, because of their high operating leverage, because of their high financial leverage, that both of those they incur to build large capacity that they're trying to fill now, and because of the lower LSM targeting in terms of low to mid fee schools, they're far more cyclical than the other two
Okay.
education stocks we will talk through later today.
Yeah.
That said, they have put a large amount of emphasis on filling their capacity, and I think they've turned the corner. They've got a trading update out where headline earnings for the half year should be up 10 to 20%. So they're doing respectably in the environment. I'm not necessarily negative on Curro, particularly since the valuation has come back down to earth.
It's really quite interesting what you point out is that they had years of expansion in, terms of capex, but now they've reached the peak of that, where now they basically moved into another dimension of expansion, and that is basically to fill that capacity. And I guess it really hinges on, an economic turnaround on that point, which it looks like we are getting, particularly looking at the political landscape, but also that could turn around the economic landscape in the country. Let's go into, Keith, the Advtech, which is basically a combination of schooling, tertiary, and then interestingly enough, you have the human resources segment of it.
Sure.
At a high level, it would seem like Advtech would be the best one at this point because of its diversity. Is that the case?
So first of all, upfront, I broadly like all the stocks in this sector. And there's three: Stadio that we haven't touched on, Curro and Advtech.
Yes.
But for a number of years, I've preferred Advtech, and it has been the right pick in this space, having outperformed the other two, particularly over the last 12 months. It's up 50-odd%, and the other two are up only 20 to 30%, which are still wonderfully up.
Yeah.
But Advtech's done better. But you touched on an important point. Advtech straddles both schooling and tertiary, and it's got brands built in both sides of both parts of those markets, and in that way, its schooling competes with Curro, albeit its schools are more mature. Because remember, and this is certainly back to the point you said about Curro, where you've got to build the school and then fill it. You can't fill a school that isn't built yet. So if you think of your cash flow cycle, there's large capex upfront, and then you slowly earn your way out until you hit break even, and then there's free cash flows hopefully from there. But those could arguably be very long-term free cash flows, because once the school's built, the maintenance isn't gigantic to keep it going.
Yeah.
The same now, Advtech schools were much more mature and therefore inherently more profitable than Curro's, albeit with less capacity to fill. And its tertiary side is more mature than Stadio's and therefore more profitable, but once again with less capacity arguably to fill. But there's slightly different economics there, because you can run night classes, but people don't necessarily have night schooling and things like that. But Advtech's done exceptionally well. Just to put this in context, Advtech's schooling side in the last 12 months grew its enrollments about 4 or 5%. Whereas Curro only grew theirs 2%. So although its schools are more mature, it's actually on a real run rate, growing
The
faster than
growth, the
Curro's.
growth is still quite, yeah, okay, quite good, yeah.
Absolutely. And its schools aren't at capacity. There is still capacity to put into its schools, and
Okay.
one can carry on building progressively and modularly as you expand. And then on the tertiary side, it grew tertiary learnership numbers by about 7%, where Stadio has grown theirs about 8%. So it's actually growing equally fast, if not faster than its competitors, even despite it being more mature and more profitable. And yet, if you have a look at its valuation, it's not particularly not dramatically more expensive than Curro, and it is quite a bit cheaper than Stadia. So
Yeah.
it's I like all the stocks in the segment, but Advtech probably still holds the most appealing proposition, particularly if one is a little bit of a risk averse investor.
It's quite interesting because you would think that more upside and you know the higher growth rates would be coming from the schools that have more capacity to fill. Do you think also what plays a role here is because they're more mature, that it's also brand awareness that kind of helps the company as well?
Certainly, certainly. I mean, schooling's an interesting thing, but people will move to suburbs just to put their children into schools.
Yeah.
Now, that doesn't happen when you build a school overnight. It also, an aspect of Curro's branding strategy that's a risk is that they've got a mono brand. So there's Curro schools, and is it Curro Durbanville, or is it Curro Sandton, or is it
Okay.
Curro? Now, that means that any scandal at any Curro school anywhere will ricochet through all the brands, and therefore you've got concentrated risk. Now, you have
Yes.
brand recognition, but you have concentrated risk in terms of reputation.
Ah.
Whereas Advtech has a number of different brands, more mature, more established, and particularly regionally strong where they are. So I'm not sure that there's a right or wrong. It depends on how they
Yes.
manage, and depends on the environment. But also they're targeting very different parts of the markets. Like I said, Curro is mid to low, whereas Advtech is mid to high.
Okay.
In terms of fees, and the high end has been slightly buffered from some of the economic headwinds that has
Ah.
perhaps played into Advtech's favor as well. So it's the short answer is it's complex.
Yes, yeah. All right. I mean, but these are really like interesting, like pockets, or, yeah, discussion points that we are going into. Keith, let's go into Stadio. Of course, the only one that is concentrated on higher education, that's tertiary. Just talk to me about the evolution of this business, but also where you're looking at this kind of the dynamics between the contact learning and the distance learning, how that's filtered through to the business.
Sure, absolutely. So Stadio, you need to understand a little bit of history. It was started within Curro and then ultimately unbundled to pursue its own destiny. So full credit to the Curro team in terms of putting together
Yeah.
the foundations that has become Stadio. But Stadio has gone off, and it's well capitalized. It still has a net cash balance sheet, and it's still in the building phase. But the CapEx cycle and the economics of tertiary are somewhat different to schooling. If you think about it, you can have a lot more blended learning, i.e., both remote,
Yes.
distance. You can have night classes and the like in terms of tertiary, and you can cycle through multiple courses within the same CapEx infrastructure. And particularly
Okay.
in Stadio's case, they've focused a lot on building distance education. And interesting enough, whereas Advtech has shifted towards including distance education, and they've spent many years in terms of building a digital platform. Stadia started off with distance largely, not entirely, largely, and they've gone about then trying to invest into. They dropped a Centurion campus that is filling up very quickly, and they're currently in the works to build a Durbanville campus, so
Yeah.
covering Joburg, covering Cape Town, and those campuses are filling up very quickly because the demand for tertiary education,
Yeah.
as well as arguably the ability to pay in that space, because unlike a student going to school, typically won't have a job. Well, I hope not. You're probably below the
Yeah.
legal
No. Yeah.
employment
Let's hope
age.
not. Yeah.
Let's hope not. a student could study part-time and you can still catch that revenue and they could be self-funding in terms of this. So Stadio has been very successful in terms of building out their tertiary side. They're filling it up quickly and they still have a net cash balance sheet, but I don't think we've seen necessarily peak capex.
Yeah.
I think they have learned a little bit from Curro's experience of not overcapitalizing.
Okay, so they're still capital light.
Capital light might be the wrong word. They're spending a fair amount of money, but they are conscious of capital. Whereas I think Curro in the first 5-10 years of existence was a banker's best friend and just did endless rights issues. So Stadio is approaching it in a lot more measured approach, which I think will serve them well in the long term.
All right. Well, I mean, of course, when we look at private education, we also look at it in the context of government failures, but also there are failures of other higher education institutions, and of course we've had developments around the closure of I forgot the name of the company that owns your Damelin campuses. No, is it Damelin?
Yeah,
yes.
I forget the name of that, but
yes.
The Damelin colleges.
Yes. Would you expect then a significant influx of those students to go into a counter like Stadio?
So let me phrase it this way. The bottleneck is not in the demand for tertiary education.
Yes.
The bottleneck is in the potential supply and the ability to pay for that supply.
Okay.
That's where the bottleneck is. So any student that had the ability to pay for them, then I would expect that hopefully they still have the ability to pay and they'll get absorbed somewhere else. Especially if this might have been different 10 years ago, where that could have been a very physical constraint. Are you in the region? Do you actually have access to a campus? But here, we now have the internet and the ability to digitally learn. Something I haven't touched on that's also very important in the tertiary space is the ability, the opening up of the legislation to allow for private universities, not just colleges. So one doesn't just get diplomas. These institutions can start to issue degrees. And that continues it's a slow burn in the background. And my understanding is some of the initial hurdles are somewhat challenging to overcome, if not somewhat ambiguous. But at some point, you can see that sector is opening up because of the public sector constraints in the space. Much like Transnet, much like Eskom, what you can't provide in the public sector, you have to turn to the private sector to fill that gap.
And let's hope that there will be an advancement in those conversations between the private sector and the government in that regard. Thank you so much for your time and really just interesting gems that you have put forward for us here, Keith. Really, really appreciate it. That was Keith McLachlan from Integral Asset Management.